Okay, what is Sui? And why should anyone care about yet another Layer 1 blockchain? You've heard this story 1,000 times, right? New chain, fast, scalable, built for the future. Sounds familiar, but here's the catch. Sui isn't trying to win the hype game. It's quietly building tools that actually make Web3 less annoying to use. And that's worth a closer look. Sui is a Layer 1 blockchain that went live in May 2023. It's built by Labs, a team of former Meta engineers who worked on the now defunct Diem project. The tech they were building didn't die with Diem, it evolved, and Sui is one of the results. At the heart of Sui is something called the object-centric data model. Instead of treating everything like a global state machine, like Ethereum does, Sui treats each asset, each token, each NFT, each contract as a unique object. Why does that matter? Because it changed how transactions are processed. They don't all have to wait in line. The network can parallelize execution, which means higher throughput and lower latency. Add to that the Move programming language, originally designed for Diem, and you get smart contracts that are more secure by default. Fewer bugs, less risk, more customization for the devs who know what they are doing. But honestly, most users don't care how secure or parallel the code is, right? What they care about is, does it really work? Is it really easy to use? Can I onboard my friend who doesn't know what a seed phrase is? Take zk-login as example. It's a feature that lets you log into the app using your Google or Twitch account, just like Web2. But instead of handing your data to a centralized server, it generates a zero-knowledge proof that links your identity without exposing your credentials. Translation: Web3 login with Web2 simplicity and no surveillance. Then there are sponsored transactions. On Sui, someone else can pay your gas fees, like the app you're using, or a protocol covering the costs to get you onboarded. That kills one of the most annoying part of crypto UX. I want to sign up, but I don't have a token to pay for gas. Gone. And one more thing. Programmable transactions blocks. This let devs group actions together, batch them, and simplify execution flows. Think of it like smart automation on-chain. Instead of signing 5 times to mint, stake, and swap, you approve once, and it happens. So yeah, from a UX standpoint, Sui gets it. As late May 2025, Sui token is trading at around $4. It dipped after a recent incident. We'll talk about that in a second, but it's been showing signs of recovery. Analytics are watching $3 as a key support level, and so far it's holding. But it hasn't been smooth sailing. Early this month, the Cetus protocol, a DEX built on a Sui, got hacked. 223 million vanished in a sophisticated exploit. Big hit. Market reacted immediately. Sui dropped. TVL dropped. Confidence took a hit. But here's the thing. The response was super fast. Sui's core team at Labs immediately rolled out a 10 million security initiative. Part of that went into new audits, part into bug bounties, and part into better developer tools. Their position was clear: we are not sweeping this under the rug. We are fixing it. That kind of a crisis response actually tells you more about a chain than the hype ever could. And the recovery is happening. TVL is climbing, projects are staying. No exodus, no death spiral, just builders adjusting and pushing forward. Sui's strategy is different from a lot of other chains that are chasing narratives. They're not pitching themselves as the next Solana killer, or the Ethereum of Asia, or the gaming chain. Instead, they are trying to do the boring but necessary work of making the chain usable. They are not farming engagement on a crypto Twitter. They are not pushing out features that reduce onboarding friction and developer headaches. And they are backing it up with a real infrastructure. Hardware wallets integrations, stable tooling, developer grants. By the way, Sui is now supported by Tangent hardware wallet, giving users cold storage that doesn't feel like it came out to 2016. That's another piece of a puzzle. In Web3 is going mainstream, wallets need to stop being a nightmare. Sui is doing its part, so the big question is Sui worth paying attention to? Let's put it this way. The tech is clean. The user experience is ahead of the curve. The response to the exploit was super solid. And the community is growing, not shrinking. You won't hear about Sui every day in a crypto Twitter. It's not a meme coin, it's not airdropping Lambos. But it's quietly laying down the infrastructure that real users and real developers need. And in a bear-to-bull transition cycle, that's the kind of a project that sticks. If you are a developer looking for a chain that won't screw you with outdated SDKs or surprise rate limits, Sui is worth a look. If you are a DeFi user who want decent UX and a minimal gas overhead, Sui has tools for that. If you are an investor tired of chasing hype and looking for the fundamentals, Sui is not a bad place to stop digging. That's the full picture. And yes, we'll be watching closely, because it's usually the projects that build quietly, solve boring problems, and stick around after the cameras are off that end up running half of the industry 5 years later. If this breakdown helped you clarify anything, drop a like, hit a subscribe and follow Botanica Crypto Media for deep dives into the projects that actually matter. See you in the next one.